Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in previous videos, and I will do a quick review on each of them. Also, I will cease coverage on these names because their chart patterns have been invalidated or did not perform up to expectation. I have put in timestamps, so please use them to skip to the names that interest you. In the last review on the 17th of January, I stayed bearish on Mastercard and highlighted its upside has been kept by the 20-week simple moving average. Now, Mastercard was again rejected over here by the same resistance 3 weeks ago, resulting in a close below the cloud. Downside is now preferred. Stay bearish on Mastercard. The textbook target of this rising wedge is at 432.4. Salesforce remains bearish in my view as per the video on the 2nd of February, and the textbook target of its head and shoulders top is at 93.11. Now, chart patterns progress in three phases. There is the completion phase, there's the correction phase, followed by the resumption phase. Salesforce underwent the completion phase from middle of January until now and could enter the correction phase next. In the correction phase, price action usually returns to slightly above the neckline, which in this case is 230, before the bearish resumption phase kicks in. The two reasons why I think Salesforce could enter into the correction phase next is that number one, price action overextended below the lower Bollinger 2 weeks ago, and this usually leads to some form of correction, which could trigger Salesforce going into the correction phase. Number two, based on the latest weekly price action, this is a bullish engulfing candlestick, which also suggests near-term rebound. So take caution. While Salesforce is still technically bearish, it could rebound in the next several weeks. In the video on the 7th of February, I highlighted on SAP's support at 165.44, stating that a breakdown would lead SAP lower, while a bounce is expected to trigger a rebound. Now note that SAP has bounced off this support 3 times. So I would take caution at this juncture because the more bounces without closing below the support, the higher the likelihood of a rebound. In the event that there is a rebound, this would be the correction phase of the cup and handle top and is likely to return to slightly above the support, or rather in this case resistance 209.1, before entering the bearish resumption phase. All in all, SAP is still technically bearish in my view, but at risk of a near-term rebound. Moving on to Adobe, it extended its decline without any correction, even though there were overextensions below the lower Bollinger. It reached a low of 244.28 this week, which is around 77.6% of the descending triangle's textbook target at 219.05. I view this bearish pattern to be a success, but will continue to cover Adobe to see if it reaches the textbook target fully. So stay bearish on Adobe. I covered Alibaba on the 17th of January and maintained a bearish outlook on it, expecting it to fall due to 3 reasons. Number 1, filling of gap ups on 9th and 13th of January, overextensions above the up Bollinger, and the trend of failing to hold above the Ichimoku cloud. Since then, Alibaba has declined, filling the gaps of 9 and 13th of January and registered a total of 3 failures to hold above the cloud, and I will stay bearish on Alibaba because the cup and handle top remains valid and has a textbook target at 119.9. There have been successful calls. There have also been calls that were less than successful. Some of them did not even see completion of their chart patterns. I will start with Meituan. I will cease coverage on Meituan because I was technically bullish on this name due to completion of a falling wedge over here. But this bullish pattern has since been invalidated after price action closed below the support trend line. Next, I will cease coverage on Danaher Corporation. I identified this stock as a head and shoulders bottom completion that has a textbook target at 261.23. Price action reached a high of 242.80. Only 59% of this textbook target was reached and has since tumbled and closed below the cloud. While this bullish pattern has not yet been invalidated technically, trading below the cloud suggests downside bias and risks eventually invalidating this bullish pattern, so I prefer to call time on this stock. I will also cease coverage on Tesco. I noted in the last video on the 10th of January to expect a rebound in Tesco due to overextension below the lower Bollinger and due to a gap down on the 8th of January, expecting this gap to be filled. Now, while Tesco did rebound, it extended its upside and has since invalidated the head and shoulders top. As a review, Tesco fell to a low of 411.70, reaching only 50% of its textbook target at 388.8. So this pattern was unsuccessful. I will cease coverage on the US 10-year government bond yield. I was technically bullish on the 10-year yield due to the completion of a head and shoulders bottom, but it has since fallen and invalidated this bullish pattern. The US 10-year yield rose to a high of 4.311 on the 20th of January, which is only about 43% of its textbook target at 4.4630. So this pattern was unsuccessful. Moving on to FX, I will cease coverage on sterling Swiss. The head and shoulders bottom that I first identified on the 12th of January did not see completion and was invalidated on the 20th of January. Now, an immediate rebound from here could qualify sterling Swiss as a double bottom, but let's see what happens. The pattern that I identified in Aussie Kiwi also did not see completion. The rising wedge was invalidated on the 11th of February, and I will now cease coverage on Aussie Kiwi. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.